Hello viewers, I'm Antonia Singut. Thanks for joining me in this edition of Business PNG. The informal sector, one that's dominated by subsistence and semi-subsistence activities with a massive pool of potential business enterprising, but needs more development effort. We'll come to that story later. But first, what's new about China? Well, it's good news. With a projected 8% growth this year, ANZ Bank, in collaboration with POM-CCI, recently held a business breakfast where the bank's chief economist for Greater China talked about China's recovery process and what's in store for the future. Here's David Con of POM-CCI having a talk with chief economist Li Ganglu.
With me in the studio, I have Dr. Li Guanyu, who's the chief economist for the ANZ Bank Greater China. And first visit to Papua New Guinea, welcome.
Yes, it's my first visit.
Thank you. Good presentation this morning, good turnout. What were you saying to the members of the Chamber this morning about the Chinese economy?
Basically, I gave an overview on China's short-term macro development, try to assure the audience that China will not head to a hard landing. In fact, we can see 8% growth this year.
Is there some doubt that China's going to be able to maintain this sort of rate of growth?
Indeed, we tend to see a lot of doubt on that last year. You probably heard a lot of reports or speculations that China was heading to a hard landing. It did not happen. In fact, China had a soft landing in the end. We also think that China's medium-term economic outlook still looks quite bright, and mainly driven by China's urbanization process. A rapid urbanization process will be a very good news for this part of the world.
That urbanization process is growth quite exponentially, isn't it? I mean, some of the figures you were talking about?
Indeed, on a year-on-year basis, there's an estimate that China will see 10 million people moving from rural sector to the urban sector. And by 2020, there's a plan that around 400 million people will move from the rural sector to urban sector.
So for PNG, what does that mean to our economy?
This means that urbanization process requires a lot of infrastructure build up in housing, in highways, in subway system, and also China will need a lot of energy, especially clean energy. We know that Chinese energy resources are concentrated in coal, and the coal is very polluting, and we have seen news.
Is energy the only thing that we have to offer to that Chinese economy?
In addition to that, we tend to see copper and hard resources increasingly, given the inflation concerns. A lot of Chinese are buying more gold as a hedge for inflation. Finally, I would like to mention that if you look at China's urbanization process, the future demand from China will be in agriculture sector. And we also know that if you look at Chinese water distribution, in the northern part of China, there's already a water shortage problem. So this means going forward, China can no longer maintain the same scale of agricultural production as they have done in the past. They would have to utilize its comparative advantage, that is in manufactured goods in exchange for resource-intensive goods, agriculture in particular.
So seriously, is there an opportunity for Papua New Guinea there? I mean, it's a pretty scary prospect, I think, for Papua New Guinea to talk about supplying into the Chinese market.
Well, indeed, there's a huge opportunity for PNG, and if you look at PNG's economy, it is in the opposite side of the endowment analysis, and the country is very complementary to China's trade, and we think that indeed China could become a major trading partner for PNG.
Is there a possibility that that China will look to Papua New Guinea and come to Papua New Guinea, invest in land, invest in agriculture, and grow these things themselves?
Well, we have not seen any initial investment in agriculture sector,
Yes.
but we have seen a lot of investment in mining sector.
Yes.
Perhaps that's the area eventually. We could see some signs of progress. We know that Papua New Guinea is already a very important coffee producer
Yes.
in the world.
People drinking coffee in China?
And indeed, we have seen Starbucks doing extremely well in China. A younger generation
Yes.
now drink a lot of coffee.
Okay.
So that's a market to think about as well.
Taking that on board. Come back to that energy scenario. I mean, I think obviously we're very happy with the way things are developing in the LNG sector, but and more to come. So, how bad is this pollution issue in China? I mean, is that a good news story for PNG?
Yeah, I think it's a very favorable news for PNG. And in January this year, we heard Beijing's PM 2.5, a measure of fine
That's a measure of
particle
pollution, yeah.
in the air,
Wow.
reached to around 700. The normal WHO allowed PM 2.5 is 225. You can see that this is mainly due to heavy use of coal in China's winter heating and also industrial production. And so going forward, China would have to seek clean energy. And at this moment, you could use the renewable, but there are still a lot of technical difficulties we need to overcome. And the natural one is to burn more LNG. In fact, China has already built a lot of LNG receiving terminal around its coastal region. We tend to
in
see
anticipation of that.
Yes, this import will rise sharply.
When you look at the American market, there's obviously a lot of hype about LNG, but there's a lot of gas now being produced in the American market. A lot from shale oil, etc. Is that something that China, you think, is going to look at itself? I mean, we're sitting here saying we'll sell your gas. Are they going to go looking for their own?
Well, shale gas is something China is looking at, but at this moment, in terms of technology and the cost, it could be very high.
Okay.
So relative to the shale production cost, I think PNG's LNG sector should have a lot of competitiveness.
Yes, and so the gas will be still cheaper than that.
That's right. I don't think in the next few years we will see China can become self-sufficient in its shale gas.
Yeah. Just to finish off, you also talked about the tradability of the renminbi now.
Yes.
Is that something that is going to happen in PNG? I mean, I heard you talking about Australia, third market to be traded. What's happening in PNG? Can I trade my renminbi?
Yes, in fact, NZ is the first bank here in this region to be able to conduct the renminbi business, first in trade finance and trade-related renminbi activities. Eventually, once the conditions are ready, that will spread out to individual renminbi
So what does
accounts.
that mean to an import and exporter?
This means that if PNG's import and export can use renminbi for trade invoicing, that means their transaction cost will be lowered. Meanwhile,
So no converting to US then to renminbi.
That's
straight.
right. One extra layer of transaction, banks would tend to charge you quite a lot.
I'm sure they will.
And
Yes.
meanwhile, PNG importers and exporters could have more potential suppliers and buyers in China if renminbi business can be utilized.
So that will attract potential sellers and buyers in China to this market?
indeed that will make China and the PNG trade relationship closer to each other.
Can you quantify what sort of savings we're talking about? I thought I heard a figure there.
We think that by using renminbi in trade invoicing, importers and exporters could save up to 3% of the total transaction.
Wow, okay.
That's quite a number.
Coming up next, the advantage of utilizing the renminbi capability to trade in China. ANZ Bank is the first bank in the Pacific to provide its customers with renminbi capability. This means corporate and commercial customers have the ability to trade directly in renminbi or Chinese yuan when dealing with China. Let's hear more from ANZ PNG CEO Mark Baker.
Welcome back to Business PNG. Following on from a very successful ANZ breakfast series with the Port Moresby Chamber of Commerce, with me in the studio, Mark Baker, the CEO of ANZ Bank. Mark, welcome.
Thank you.
Mark, first of all, thank you very much for giving us the opportunity to listen to Dr. Lee this morning. What did you take out of his presentation for your clients particularly?
I think it just reaffirms the positive outlook that we've got on the country, and we said this about a month ago when Mike Smith came through around our longer term view on PNG, and I think this really just focuses on where the growth is going to come from, and it's China. It was a pretty detailed presentation, as you know, but I think some of the myths have been dispelled about the hard landing. We're seeing urbanization as a real driver of growth. So if I was sitting there as a client with business here in PNG, particularly if I'm connected with the resources industry, I'd be pretty encouraged about the longer term future.
Yeah, I don't think everybody was totally convinced on the hard landing, but we'll move on from that one. I think the general feeling was that that level of, what sort of level of growth we're talking about in China?
Well, I think, as Dr. Lee was saying, really when you're looking out to 2020, between 6 and 7%, with potentially between now and 2015 slightly higher at probably 7 to 8%. By any global standards, that's pretty impressive.
Yeah. So what's in it for the PNG economy? Where are you? Where do you think the key areas for your clients are? Just in mining, or is it more?
Well, mining. I mean, gold, copper, nickel, and gas are clearly the drivers around the urbanisation piece. But we're also keen to try and raise the level of debate around agriculture as well. In particular, coffee and in particular palm oil. There's two key commodities where Papua New Guinea could really drive significant growth from and get growth into the wider parts of the economy. There's no
interest yet in palm oil, for example, out of China?
We're not seeing, and I know you asked the question of Dr. Lee before about Chinese investment. We are seeing investment in palm oil, not actually coming from the Chinese market. That's not a problem in itself. But the fact that there is interest and investment in that area is, I think, is encouraging for the country.
Yeah, I mean, obviously talking about the growth in their consumer base, the agriculture. I mean, do you see major opportunities for Papua New Guinean growers? And as I said to Dr. Lee, I think it's a very scary scenario, I tend to think. I mean, we do a fair bit of work with small exporters, and you know, it's been into Australia, into New Zealand. That's hard enough. Is there really a good opportunity there for our guys to get into that marketplace?
I think there is. I mean, I was in Goroka last week, and the market is out there. The challenges that we've got, and everybody knows these challenges, are around infrastructure. And it's actually about getting the product through the ports and out to the market.
So the challenge for you is the finance is not a challenge.
The finance is not a challenge.
You're going to do that.
The finance is not a challenge. It's getting product to market and getting it exported. And that's really the challenge. But coffee, as you can see, is a growth industry. Most of Papua New Guinea coffee goes to Europe. Very little, if any, goes directly to China. And there's a huge opportunity on our doorstep.
So I mean, obviously, with such a huge consumer, this issue of urbanization. I mean, the scary figures on how China is growing. opportunities there and for Papua New Guinea, or just lessons to learn?
I think opportunities there are around the story of the two parts of the story. One is energy and one is diet.
Yeah.
So energy needs will clearly increase significantly, and all of the infrastructure that goes with it. And then, as a rule, diets change when people move into cities. They tend to go to more a protein-rich diet. And this is an opportunity not just for Papua New Guinea actually, but for the wider region and Australia as well.
How heavily involved is China in the existing LNG project? Are they buying this gas?
Well, they are one of the off-takers.
Okay.
I believe, and I think the significant part here is the future of LNG and future trains.
And we talked about the pollution, how it's going to move things through there. The other thing I think that's important to bring out is the renminbi. What's the news today for renminbi and ANZ Bank?
Well, today,
what have you got to tell us?
Today, I'm very pleased to announce that commercial and corporate customers of ANZ can trade RMB today in our treasury team. What that means for people is that if they are importing from China, they can ask their Chinese suppliers to provide a price in RMB.
To invoice in renminbi.
Correct.
Okay.
And we will settle those transactions. And there's probably two key advantages.
And that's
for people.
today. That's as of today.
As at today.
Okay.
That is now achievable. It's been done with ANZ for well over a year in Australia, and we launched in Fiji last week.
Right.
Two key advantages for customers around this. One is the ability to negotiate potentially a better price from Chinese suppliers. Typically, we're seeing around 3 to 4% as a difference in margin around that. And secondly, also just the speed at which we can actually remit funds to suppliers, particularly if ANZ are at both ends of the transaction.
Will it give the Chinese supplier confidence? Is he happier to deal in his own currency rather? Is he hedging on is he worrying about the US dollar, so he's putting a bit on? And
that's exactly what they're doing. So if you're a Chinese supplier and you're actually quoting in US dollars, you need to protect yourself.
So they know the renminbi, they don't know what the US dollar is going to do. Well, they think they know the renminbi, but they don't know what the US dollar is going to do.
So what this means is that our customers can actually take that foreign exchange position themselves on a spot basis.
Okay.
That's something which they can't do at the moment.
So on the again, on this tradability of the renminbi, are we at the stage already you can offer forward cover to?
That's correct. So we can do both spot and forward cover today.
Okay, that's it. So that's a real opportunity for a trader here. I know there's a few people in the room sort of saying, "Oh, okay, that's it." That's clearly you've done it in Fiji. It's not that long in Australia since that's been done. So is this a concerted approach by the bank to the renminbi in the Pacific?
I think we saw today from Dr. Lee's presentation that the Chinese government had gradually been liberalising the RMB, and it's really 2009 when it became available for traders with an underlying trade transaction to actually execute in RMB. What we've really done is roll it out in Australia first, and we have over 1,200 clients in Australia currently trading RMB for underlying trade transactions. We've now seen how that's developed, and we're gradually rolling it out around other parts of the ANZ group.
But this is for anyone. We're not talking the big boys here. This is anybody who wants.
Corporate and commercial customers. So an SME customer all the way through to a major player.
So that small coffee guy in Goroka who can get his act together and get his coffee.
Potentially, they can ask for an RMB price for a buyer in China today.
Okay, all right. So, you know where to get your renminbi then. ANZ Bank. That's the good news for Papua New Guinea and the tradability and this opening up of the renminbi currency. With me in the studio today, I've already had Dr. Gan Liu, the chief economist with the ANZ Bank over Greater China, and Mark Baker, the CEO of ANZ Bank. That's it from Business PNG.
The informal sector, stay tuned, that's next. If you've just joined us, you're watching Business PNG. Now, the informal sector, better referred to as the SME or small to medium enterprise, has proven to be the backbone of development. In Papua New Guinea, it's no different. However, there's quite a lot more to be done to revamp this vital sector. Here's Hannah Arya with a story pertaining to the SME sector.
PNG's economy has been focused mainly on the informal sector, dominated by subsistence and semi-subsistence activities grasped in whole by the majority rural population. The sector is a massive pool of potential business enterprising and entrepreneurial ventures. Better referred to as the small to medium-sized businesses, the sector has been described as underdeveloped.
I think the challenges here are incredibly difficult. Our geography makes it challenging just to connect people via a normal means such as road transport or shipping or any sort of logistics is hard in Papua New Guinea because of the geography we're dealing with. That also makes the barriers to banking difficult.
Small business projects have remained largely unserved, contributing to their inability to sustain themselves. The one factor that signifies the lack of enthusiasm is that banks had stopped lending to small businesses. According to a study by the International Monetary Fund, almost all financial institutions declined to lend to the SME sector simply because they had limited assets and were incapable of managing internal resources.
In many places around the world, experience shows that the biggest employer of a population of any country is small to medium enterprises. Somehow over the past 37 years or so, we have lost that focus. And I am hoping that some of the incentives that we are going to highlight tonight will help us develop the first step towards correcting that wrong that has been happening in our country for so many years.
Last year, affirmative action was taken by the government to introduce a risk-sharing facility. More than 300 million kina was injected into the SME sector. That exercise delivered low interest rates and maximized lending availability at all state-owned financiers and commercial banks in the country. But SMEs still haven't been equipped with management skills. Some organizations were paid to conduct training workshops. Even major resource developer SO Highlands, a prominent PNG LNG development partner, made a strategic effort setting up the Enterprise Center, a branch of IBBM. The center today considers itself as a one-stop shop for SMEs. The IBBM Enterprise Center continues its campaign, announcing a brand new service to further assist SMEs. The Financial Advisory Service is a specialized business management product that helps small businesses apply for bank loans and creates confidence in the lenders.
More on the SME sector when we come back. The Institute of Banking and Business Management, IBBM Centre, has launched a financial advisory service, a new business product intended to assist the SME sector access credit facilities. This product is not restricted to impacted areas of the LNG project. SMEs from other parts of the country are welcome to participate.
In his dual role as the Director of Basic Limited and Chief Manager.
At the launch of IBBM's new product, a range of different key areas of starting up a business were highlighted by division coordinators, an approach that acts as a starting point for the new financial advisory service. Assistant Coordinator Sebastian Negins gave an overview of the PNG financial market, information and awareness that he described as a missing link.
Mentioned we have various loan providers. You got your banks, finance companies, savings and loan societies, then you got non-government organizations. So it's just a matter of being awareness of all these players involved and where to go and what we have and what needs we really need. That awareness is what's lacking with us right now. And there's also non-government organizations in PNG operating. One of them is the International Finance Corporation. It's a member of the World Bank Group. They're currently implementing some programs in partially guaranteeing loans in partnership with local banks and government departments in here. So these are some programs you guys, some, especially the startup business or indigenous business, they provide, in partnership with a local bank and government departments, and helping them in assisting finance. Most startup businesses don't have much capacity or money of their own, so to lessen the risk, corporations come in and just assess that. So make it easier for banks to accept.
The ability of small businesses to access bank loans is a difficult arrangement. Banks simply have requirements.
Another area that the banks look at when you apply for loan is that they require that you implement some process and controls in your business. Otherwise, they will see that your business will fail in the next 2 or 3 years and they won't give you a loan. Also, through our Enterprise Center of Financial and Advisory Services, we also provide advices and mentoring services to assist PNG businesses to implement good controls and processes. So, and the last thing is sustainability. They will also look at how viable is your business to continue in the next 2 or 3 years.
The new service will identify key areas of business in a small venture and provide external professional help. The specialized assistance that has become standardized in all major commercial and state-owned banks. The IBBM Enterprise Center has created a database of all SMEs it assists and has formed a lender criteria to identify individual business concepts, aligning them with their services to allow for their long-term endurance. Managing Director of Nationwide Microbank Tony Westerway gave a presentation on a banker's point of view. Westerway advised that the two ultimate things banks want to know is a business plan and a reliable cash flow forecast.
But first of all, you need to consider the costs and work out how much money do you need. And don't be too conservative here. If your initial loan is too small, you may end up going back to more loans in the future. It's going to cost more money. And the financier is starting to get worried because you've under-costed the loan and so forth. So it's really, really important to do a business plan. The financier will want to see that you've taken the time to prepare an intelligent, well thought out, complete business plan that shows how much funding you need, how you will apply it, and what sort of returns that you will get for your business. And of course, the second most important document, these are not exhaustive, but I think the two most important documents you take to your bank or financier is your business plan and it's your cash flow forecast. So the cash flow forecast is going to tell that financier what returns are in your business and how you can adequately repay the loan.
And that's how it is in this edition of Business PNG. To view our programs online, follow the website address now shown on your screen. And for queries and suggestions you'd like to share with us, do send them through to businesspng@mtv.com.pg. I'm Antonia Singut. Enjoy the rest of your viewing.